How's everybody doing?
All right.
So we're we have our guest of honor. Where is it? Renee, you look like an angel with the sun shining on you.
I wish. Thank God the sun is shining on me. I was just saying to everybody, I got to get a curtain for this window.
So I'm gonna make you the host if you need to do anything here. Let's see if I can even do that. I guess I'm not even the host.
It's okay. I don't really have any documentation to share right now. So we're just going to talk about this program. Well, I do. I have a flyer I can.
Yep, I'll get it fixed, but continue.
You want me to call Fred Rob and get it?
No, 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 no. I'll get it done.
Okay, bye.
You want me to get started?
You can get
Okay.
started.
Great. All right. So today we are going to talk about first-time buyer programs and how we can sidestep the requirement for first-time buyers and a program that's a portfolio product specifically to Cornerstone. So this is a product that no one else has. We're the only ones who have it. So I'm going to assume that many of you have heard the term first-time buyer products. There's lots of first-time buyer products out there. Some of them are very good, but some of them have a lot of restrictions attached to them. And I want to talk first about what everyone else has. So everyone has the Fannie Mae Home Ready or the Fannie Mae Freddie Mac Home Possible. So these are two programs that came out that Fannie and Freddie rolled out that were basically for the first-time home buyer, even though you don't have to be a first-time home buyer to use them, but they have income restrictions. And what they did is they offered a lower rate to buyers if they fit inside this 80% medium income range. So for example, in Bergen, Monmouth, Mercer County, Essex County, Hudson County, you can't make more than $93,000 a year. Mercer County is a little higher. They're about $100,000 a year. But with that program, if conventional rates were in the low sevens, you could offer a client a rate in the mid sixes, 6 5/8 with a point. So those are good products to have in our toolbox. However, they're restricted because not many people only make $93,000 a year. So then there was another conventional product that rolled around behind it that was only for first-time buyers and had no income limit, but those rates are like 7 3/8 with the point. And the mortgage insurance on both of these products, just to point out, is pretty expensive. For example, if we did a $500,000 purchase mortgage and the borrower put 3% down and took a 485 mortgage on either one of those two programs I just relayed, the monthly mortgage insurance would be anywhere from $497 a month to $658 a month, depending on the amount of coverage required. Now I'm basing these scenarios on 3 factors: a 660 credit score, 3% down, and assuming these are in Essex County. That's what I just chose. So the payments on those two loans, not counting taxes and insurance, the Fannie Mae Home Ready and Home Possible with the income limits would be about $3,600 a month. The no income limit required one would be about $4,000 a month. So the PMI, as you can see, is extensive, the private mortgage insurance. The program that Cornerstone developed is a no income limit. You do not have to be a first-time home buyer, but you cannot have owned a home in the last 3 years. That particular program with 3% down has no mortgage insurance. It's huge. You're going to save the client anywhere from $500 to $650 a month on this scenario. Now the program itself, so basically it's 3% down. The borrower can get a gift. The borrower only has to put in 1% of the purchase price to use this program. Their FICO can be as low as 640. You can even do this program if someone has no credit score. we can build credit for them. It's available on 1 to 2 units. However, here's the one and only catch to this. It has to be in designated areas. So the only 4 counties right now that it's available in is Bergen, Passaic, Hudson, and Essex. However, you have to have an address. So if any of you are out there working with buyers or possibly listing a home and you send us the address, we can plug it into the system and it will tell us if this particular property is eligible for this Home Advantage program, which this is the name of the program. Borrower has to be a primary residence. They only need to have 2 months reserves. Condos, you don't need to have FHA or HUD condo approval. Because mostly everybody thinks if they're not going to fit into a first-time buyer program, they'll go FHA. And we're noticing, first of all, FHA mortgage insurance is very expensive. They charge 1.75% of the loan amount on top of the monthly MI, which is pretty expensive. So you don't have to worry about this with this particular program. They do have to do a home education course online. It's quick and easy, and they have to pay $75. But the rates are significantly lower. You could do 6.5%, no points with no mortgage insurance. So basically those payments that I explained before of $3,600 and $4,000 would drop down to $3,000. So it's tremendous. You can use this to market a listing. The big other addition to this is you could do a seller contribution for the closing costs. Have your borrower put 1% of their own funds, get a gift, and basically get into the house with only 1% of their own funds, with a very low rate and no mortgage insurance. So we're really excited about this program. It's something very unique. It's something that you could offer on a particular listing to make your listing stand out and attract, more buyers. You certainly could use it for any buyer you're working with because it doesn't have an income limit. But sometimes, many borrowers don't have the full down payment and closing costs. And this will give them a much, much lower rate. And they will not be forced into an FHA or some other first-time home buyer product or dealing with the state and JMFA loans. We have all of those as well. This is all done in-house. So I'm going to open it up to questions because that was a lot of information I threw at you here.
Do you have a map of the locations? I assume it's a specific zip code that applies to.
Well, so yes, Mickey, it is and it isn't. So for example, Bergen County is listed as the geographical area, but it's based on address. Now, I'm actually working with corporate to obtain a list of properties that are available in each of these counties so that we could then, go to the listing agents as a loan officer and say, hey, we have this product for that particular house. But I would say if you're working with a buyer, the quickest and easiest way right now is if you're showing them properties and they're interested in, 1 or 2, 3 properties, send us the addresses and we can go in and look them up until I get the list.
But I do assume that it's going to be specific to a certain area, like within Bergen County, let's say, I don't know, maybe North Bergen, I'm just going to use a hypothetical, has that program available because of location. I know I've dealt this with somebody else past, and it was in a specific zip code that applied to.
Yes, so there are other programs that are zip code designated. That's not this one.
Okay, when would you have that list? Because it makes it hard for us to, reach out to you each time we have a house that we even want to show. I would prefer to have an area that I know I can even look for my clients in those specific, locations.
I agree.
And it really works best for buyers now than for sellers. I mean, in today's market, a seller isn't worried about finding a buyer for their property. They're going to have multiple offers anyway. So,
correct.
it's more pertinent for the buyer.
So I used an example today of 32 Crawford Street in East Orange. And it took it. And I used 18 Essex Street in Nutley and it took it. So I will get that list. I'm working on it now with them. And then I can get that out to you.
Renee, maybe even asking IT or corporate to develop a link that we can share, that they can plug in the address themselves and see if it comes back as an accept.
That's not a bad idea.
Yeah,
Yeah.
this way they don't have to feel the pressure of
Yeah.
constantly reaching out to us, and they could log
Yeah.
on themselves.
Yeah.
I believe Sean said that he was working on that.
Yeah, that
Yeah.
would be the best solution.
Yeah.
Renee, from a seller standpoint, when a buyer comes along and presents a contract that shows they're putting 1% down, what level of investigation are you doing to provide them with a pre-approval letter for a 1% down loan?
So first of all, this program is 3% down, but the borrower only needs to have 1% of those funds. So they would have to get a gift for the other percentage. So the only products out there right now that are less than 5% down are first-time home buyer products that have all those other restrictions, or FHA, right? And all of a sudden now nobody wants to take an FHA pre-approval. We're noticing very far and few. We're back into the 90s again when people used to think FHA was bad. But just so you're aware, Robert, when we do a pre-approval, we do not do a normal pre-approval like most loan officers. We don't just have a conversation with the borrower, listen to what they say, and then tell them they're pre-approved. We make them sign on to our link, take the application. We take a full application on them. We run their credit report. We have them upload their income and their asset documents. And we have them send us everything. And then Kyle, our underwriter in our office, reviews the whole file as if it's being underwritten. So when we give out a pre-approval, you're getting a real approval. You're not getting just a pre-qualification.
So is that a guarantee to close?
Yes. Yes. And that's why we specifically do that, Mickey, because I'm not going to give out a pre-approval and then all of a sudden, and you've all been there, for those of you that have been doing this a while, you're told everything's fine. And then all of a sudden they get into application and it's not fine. And that's why. Because most loan officers don't want to take that time or spend that money on having a full underwrite and running to you and having the file completely scrubbed, as we call it, or underwritten. And that's what we do. And then our underwriter comes back to us, gives us a little list of items we still need. We go back to the client at that time and we say, hey, we need page 5 of this. We need another Schedule A return. We pull that back together, we review it again, and then we issue the pre-approval. And then I would say 97% of every loan that comes out of underwriting in my branch has 2 conditions: homeowners and canceled down payment check, and that's it.
I got a question for you.
Yes.
Just real quick. I've had, sorry, I'm at home and I got a vendor doing work in my house. A lot of people have their links, and just twice this year, I had 2 people that were like, they just couldn't deal with the link. If I called you up and said, can you just do it old school? Are you willing to do that?
Of course. I am old school, Robert. I've been doing this almost 40 years. I have a lot of clients that first of all, I can't even expect them to try to do the link. They're just, they're born in the 60s. They don't want to sit here and fill stuff out. We can do it for them in 10 minutes. Absolutely. The reason I like the link, though, is because when they send documents to us, I want those documents to be secure. And the link is the most secure way to send documents. No loan officer in this business should be receiving or sending documents through email. It's not secure. So You know, but we do that. We meet people in offices. We take their documents old school. I mean, we had a mailbox outside our office for decades to have them drop their documents in, and we take them and scan them and upload them, and we can fill out their application for them. Yes. And sometimes if the borrower, if they're super easy and simple, meaning a teacher, a salaried person, we may not have to make them go through the whole portal. We can just have them upload to us a different way, their W-2s, their pay stubs, and their bank statements, and we can review them. But that's the key, is getting their documentation and reviewing it. So many loan officers do not do that. I don't know why. It's frustrating when I hear that.
So Renee, I just want to jump in for a second. If anybody has any other questions that they want to add onto the chat, Kyle is on the line and he's answering some questions. We had Sue ask about the down payment, if there can be a seller's concession to contribute to the 3%, which we just explained to her that, you know, a concession can only go towards closing costs.
Correct.
The down payment money must come from either 2% gifts or 1% from the buyer.
Correct.
Okay, and then the other question was, will they need to show a 2-year work history?
Always need a 2-year work history. Unless they were in school. So if you have somebody coming out of university and they have transcripts and they went to school for a specific type of employment, then you don't need a 2-year work history. But those particular programs, and those are, we have other options for people who don't have a 2-year work history. This is not it.
Also, you had mentioned on one of the other first-time homebuyer programs that the income limit was 93,000.
Mhm.
Was that for a household or per
No,
individual?
single, individual. Yeah. And if you're a household, obviously it's higher. There's a whole grid for income limits.
Well, that's not so bad with 90 individual,
No,
Right, it's not.
no,
especially in the you know, in the 500 to 600 K loans.
correct, correct.
So Mark is asking, when do we think it'll be available in the Monmouth, Ocean, Middlesex counties?
Well, we're actually working on trying to get some other additional products similar to this one for Monmouth and Ocean County. We do have the NJMFA. We do have a couple of other products that are also designated by property for that. And we always have, of course, the other two first-time home buyer, but I love this product because of the minimal MI requirement. But we do have another product that will allow a second mortgage. So right now, like we could do 100% financing FHA. So we could use that in Monmouth County right now if we had to. If you had someone who didn't have, you know, the 1% or didn't have enough money down, we could do a first and a second, and we could give them a second mortgage to get to the 100% FHA. But yes, we are working on Monmouth County for sure.
Okay, so Sue had a concern, basically saying that you cannot sell this as a 1% product then, 1% down payment product.
Yeah, so it's not a 1% down, it's 1% of the borrower's own funds.
Right.
Right.
It's a total of 3% down.
Right. So if you had the right buyer and the right seller, you could actually have them purchase this home with the buyer only coming out of pocket with 1%. You could have the seller contribute for the closing costs. They could get a gift for the other 2% for down payment, and they could get into the house with 1% down.
Of their own funds.
Correct. Of their own funds. Yeah.
And also you had mentioned the FHA 100% financing. I'm not sure if everybody else knows, but VA is also 100% financing.
Yes, but you have to be a veteran.
Or a spouse.
Yes.
And is USDA also 100%?
Yes, but again, now that's designated area specific. So it has to be in a USDA area.
So technically we have 300% financing options if it's in the right area.
Correct. Correct.
And just to clarify this a little bit further and to avoid additional confusion, a lot of these programs are, the core of them, the skeleton of these programs are either based off of FHA financing. So they will follow FHA financing with either additional restrictions or less restrictions or conventional products. The one Renee is talking about today, that is based off of a conventional loan product. So there's different pluses and minuses with regard to the program itself. So there are, not all products are geared for every borrower in every area. There's geographic restrictions, which Renee mentioned. There's debt to income restrictions, down payment restrictions. So if you have a specific borrower, you know, we would be happy to walk them through that and hold their hand through every product that they're qualified for.
And also pointing out the big plus of this program is no mortgage insurance.
Right.
There are no other products out there that don't require MI with less than 20% down. So that's huge. On this scenario, a $500,000 purchase with a 485 mortgage. Under all the Fannie Mae, home ready, home possible, even the conventional, the MI payment is between $497 and $658 a month. That's a lot of money.
Yeah.
I mean, think of the buying power that you can qualify a client now by reducing their payment on average $550. That's huge.
Yeah.
I mean, to get into this product, to do a 6.5, 0 points, no MI, up to 766,000 with no income limit. And you don't have to be a first-time home buyer. You just can't have owned a home in the last 3 months. And
36
you
months.
can do a non-traditional credit if they don't even have a FICO score. And the ratio requirement's not terrible. I mean, it's 38-41. And if the score goes up, if the credit score goes up, then the qualifying ratio gets easier, but the rate gets a little worse. Just like we were talking about on Rob's meetings on Friday, where if your score is better, you're getting a worse rate. This is an example here. But I priced all of these out on a 660 credit score. Now, if you tried to price a regular conventional 5% down, 660 credit score, your rate and mortgage insurance would be tremendous. So that's why everybody jumps to FHA when they're in that bucket. And this is an alternative to that, especially if you have a condo and it's not FHA approved.
Wait, this is FHA?
No, this is
Oh,
not
okay.
FHA.
I didn't
but
think so. Okay, okay.
what
got it.
most people do is if their score is low, the add-ons for credit scores under conventional financing are so high that what they tend to do is then go FHA because their payment will be less. But then you get tangled up with the seller accepting an FHA pre-approval. So this is a great alternative to it.
Right. And
Or sometimes borrowers only have 3.5% down. They want to buy a condo and then the condo's not FHA approved. So if they're in these designated areas and we can fit them into this product, this is a home run. Hence what the name of the program is called. We changed it to Home Advantage. It used to be Home Run.
right.
We
Renee?
need actually
And just to-
need the list of the designated area without which we will not be able to sell this product. So like the other agent said, that we cannot literally call you every time we have the buyer for that. So the list of the designated area is the thing that we need in order to sell this product here.
Yeah, so again, hopefully for those of you that will be working with us together and we're working with clients together, we will immediately ask what houses are they looking at. Most of the time when you go to get a pre-approval, whatever mortgage rep you're dealing with, if they're not asking you for a copy of the listing to get your pre-approval, shame on them, because I would question that pre-approval. They should be looking at the listing, confirming what the taxes are, confirming where the property is, making sure it doesn't need flood or some other type of insurance that could affect your qualification. So when you go to get a pre-approval, that's when you're going to know what house they're putting an offer in on. And then we check it. But in the meantime, I agree, we have to get some lists, and I can do that. I can work on getting the lists. So I think this is a great option to have.
But I encourage everyone to, if you have any other questions, you could put it in the chat. And Kyle is trying to answer everyone's questions. Renee, can you clarify, please, on the first-time home buyer time limit there? Is it 36 months, 3 years? What's the guideline on them?
It's 3
Not-
years.
3
3
years.
years. 36 months, same thing.
Okay.
Yep. So they could have owned a home in the past, but they can't have owned one in the last 3 years.
I think that's Rob in the background.
I'll go tell him to mute.
Thank you. So I'm curious to ask, so how many of you have done any type of out-of-the-box products like this for first-time buyers or buyers who are looking for a unique product other than conventional or FHA? Nobody?
I have a question for you though.
Okay.
Do you have any programs for buyers that work for cash?
That work for cash?
Yeah, that don't
Yes.
have any income.
They get paid,
verification.
they don't get a paycheck, they get cash.
Yes. We have a bank statement program. So if they're putting the cash in the bank, then yes, we would take 12 months or 24 months worth of bank statements and
And you
whatever,
could do 12 months, you could do as little as 12 months.
depending on the client, but yes, depending on.
What
the
does it
FICO
depend on? Just
FICO,
curious.
FICO score and down payment drives everything.
Got it. Okay.
Yeah, for every program, that is. It's always FICO and down payment, and then you can figure out where they can fit. But yes, we have programs for that. Does anyone else have any other questions?
So it's not overly important that you guys remember the specifics of these programs. Just know that we have them and
Mhm.
we are going to do whatever we can to provide the proper financing for your borrowers. Get their payment as low as possible, get the interest rate as low as possible. The keys here are obviously the lower rate, and then the avoidance of the mortgage insurance. That brings the affordability or the payment down. So the affordability for the
It
borrower
goes
is
way up.
stronger.
Yeah.
And a lot of these people, these borrowers that we're discussing right now are first-time home buyers that are primarily payment conscious. So any bit can help. And these kind of programs are going to make all the difference when they are the ones making the mortgage payment every month.
Exactly.
Are these programs available in Florida?
I'm not sure if this particular type of product is available in Florida, but I can find out. Who asked that question?
Colleen.
Colleen. Okay, Colleen, I can find out what geographical products are available for Florida. What's your last name, Colleen?
Dubinsky.
Okay.
Renee, do you guys have some type of cheat sheet with just the basics of these programs that we could refer to and then get more details from you as we need them?
Yes, I have actually for this particular program right now, I have a flyer that
Yeah, I feel like, didn't we present this to the Tinton Falls?
yes,
when we did our meeting? We
yes.
definitely have.
So
a flyer.
if you get that to me, we'll get it out to everyone.
Yeah, good idea.
Yep, yep. Hold on, I'm gonna send it to you right now, Deb.
And so for any of the programs that you discussed today, that'd be great if there was some type of flyer or cheat sheet that we could look at.
Yeah, there is a couple flyers actually. So I will send you the one from today. Today's program that we're discussing is called the Home Advantage 3 program.
Okay.
Okay. And then I have some sheets on all the programs we have, but I don't, sometimes if I give too much information, it then starts to become very, because there's a lot of ins and outs to each product. But I would just try to think in the back of your mind when you're talking to a buyer. If they start to say, oh, but I don't know, the payments, and then I have to have mortgage insurance. Well, now you know there is a program out there that doesn't require mortgage insurance. And from what I understand, the areas are pretty broad in Bergen, Hudson, Passaic, and Essex County. So, and then even if they're outside that county, we do have some other products that we could help in the world of first time to help drive the payment down. And are there any other questions here? Is Kyle answering all these?
Yes, I do have questions. What are the extra fees and how do they look like? I mean, in terms of the fees that the buyer have to pay extra.
There's nothing extra. $75 home education class is it. And they do it online. It's very simple. That's it. There are no extra fees. There's actually less fees, tremendously.
So Michelle is asking if we have these programs for Union County. And I think Renee touched upon this briefly, that they are waiting for other counties to open up. But currently we're just working in the existing 4 counties.
And I'll find out how soon the other counties are going to open up.
So it was Bergen, Passaic, Hudson, and Essex. Is that correct?
Yep.
I'll put that in the chat.
Does anyone else have any other questions or anything else you want me to cover regarding this particular product? Okay. Well, I want to thank you all for getting on. And hopefully we can keep these going. We have so many products to go over and so many great things here at Cornerstone to help your borrowers and even your sellers. So I look forward to talking with all of you again soon. Thank you. Thank you.
Have a great day, guys.
Have a great day.
Take care. Bye-bye.
Bye, Deb.
Bye, everyone.
Bye.